and welcome to my channel. For those of you new, my name is Dave and I work in financial services, and these videos are a mixture and journey towards financial freedom. They will cover financial products and financial well-being so you, like me, can reach your goals sometime in the future. Now let's get into this latest video. So this latest video is about my stocks and shares ISA review for the month of May 2023. Now it's not to boast or brag or say look at me, look at the size of my portfolio. It's to prove if I can build a sizable portfolio, you can also. For those of you new, the plan is annual return of 10% each year. For this year, we're looking at annual dividends of £2,400, so roughly £200 a month, and a year-end portfolio valuation of £94,000. So how have we done so far? Well, at the start of May, the portfolio was worth £78,089. End of the month, struggled somewhat. It was worth £77,579, a loss in the month of £510. Year to date, a return has been 4.19%. Now, during the month, contributions were reduced slightly. We paid in £208.11. And we look at the following chart. For the tax year to date, from April the 6th, we've paid contributions of £1,200 or £1,270.84, and predominantly based within financial services. And our platform providers charge monthly fees of £12.32, which is about average because it's based upon the size of the portfolio as a percentage. Look at where the portfolio is invested. So again, look at the following chart. Predominantly based in UK and Europe, makes up 63.61%. 20.79% is in USA and Americas, and 13.97% is in Asia and emerging markets. Now, during the month, we received some very nice dividends. We're expecting £200 on average, but we received £626.60. And again, quick overview of where we received the dividends. So BlackRock European Fund gave us a dividend of £9.76. Aviva gave us £249.33, and we reinvested that and we got 59 new shares. Lloyds gave a very nice dividend of £261.90, reinvested and gave us 559 shares, and our passive adventures fund gave us a dividend of £105.61. So year to date, £818.11. Okay, slightly below our target of £1,000, but a very good month. And across our holdings, our 9 shares, we've got an average yield of 4.74%. Let's now dive into where the actual shares or the holdings are held. So first of all, we'll do our shares. At the moment, we own 9 shares, 5 in profit, 4 in loss. Total share values of £34,388 makes up 44% of our portfolio, of which 38% is in the FTSE 100 and 6% is in the FTSE 250. Our largest holding is Legal & General, 3,651 shares, £8,300, makes up nearly 11%, but it's given a very nice yield and it will pay a very good dividend during the start of June. Our next holding is Lloyds Bank. We own 16,928 shares, £7,500, nearly 10%, and it was increased during the month as a result from the nice dividend we received. And also then back into insurance, we've got Aviva, 1,264 shares, nearly £5,000, did give a very good dividend in the month, 6.42%. So predominantly, shall we say, financial services based. Now, away from the financial services, we own Card Factory, 3,207 shares, nearly £2,800, 3.6% of our portfolio. It has had a very good run lately. It's gone up to over £1 a share. Now struggled in the month for some reason. It's now back to, shall we say, 80p a share. But it is reducing its debt. It is making some very nice profits, but it is under some kind of restrictions because of COVID loans and restrictions, but they will be out of the way, shall we say. the end of 2024, and it can resume dividends at the date, but it is very cash rich. It is reducing, shall we say, outstanding debts, but it does make a very good, nice profit margin. And it is actually expanding within the high streets. Our next holding is NatWest, 936 shares, £2,400, 3% of our portfolio. And again, during the month, okay, the UK banking government has now sold some more shares, now owns less than 38%, so it is being reduced gradually, but a long-term buy, and again, a very cash-rich company, has increased its dividends recently. And then also in the banking sector, we own Barclays, 1,588 shares, £2,000, 3% of our portfolio. Again, very good yield, very cash rich, does pay good dividends. Away from the bank, shall we say, we own Sainsbury's, the retailer, 844 shares, £2,300, 3% of our portfolio. Everyone needs food, everyone needs to eat. It has struggled with margins, it is on some kind of price war inflation, but again, very cash rich, and dividend was recently increased. Our next holding is AJ Bell, a platform provider, 629 shares, £2,000, 2.5% of our portfolio, is what we call a growth company. Assets under management have increased quarter by quarter, number of new clients is growing, but very cash rich, and it does pay a small dividend, but it has been increased. And then finally, we own HSBC, 285 shares, £1,700, 2% of our portfolio, and it has been on a very good run recently. It did have very good results. Quarterly dividends being reinvested or reintroduced, and it is paying a special dividend, and it has a very good yield. So on that basis, we did buy an extra £248 of shares within the month to increase our existing holding. So as I said, 9 shares, 5 in profit, 4 in loss, mainly based within financial service insurance, but what were considered safe, secure, steady, boring shares. Does what it says on the tin, but it did give us some very nice dividends of £600 during the month. And all what we concerned with long-term buy and hold shares. Let's look at the funds within our portfolio. We own 12 funds, 6 in profit, 6 in loss. £43,000 makes up 56% of our portfolio. Now, I'm not going to go through all 12 funds, but just the largest ones. So our largest holding is a passive adventures tracker fund across numerous sectors, shall we say. It was bought for diversification and it's very cheap to run. £17,200 makes up 22% of our portfolio. Has got a yield of around about 2.5%, and it did pay £100 dividend during the end of May. We can just switch off, said that it will cover numerous sectors across the world. Our next holding has done very well recently, is a legal and general technology fund. Nearly £8,000 makes up 10% of our portfolio. Again, very low fees of 0.1%. Owns around 260 shares, but we can just switch off. But the tech sector has, shall we say, recovered during the month, so a very nice profit within that respective fund. Our next fund is quite selective. It's Ballygifford Positive Change, £3,800, nearly 5% of our portfolio. Owns about 35, shall we say, long-term quality hold shares, but it was done for diversification across what we call ESG or social governance shares. Our next holding is a US small company share. We put 3,000 in, it was in profit, it has struggled, it's now worth £2,900, but it makes up 4%, but it has been, shall we say, struggled in the last few months. It may be something we, shall we say, leave when it does go back into profit and put into our passive fund, but at the moment, it was bought for a reason, shall we say. Our next holding has struggled somewhat, is a China fund, £2,600, 3% of our portfolio. China and emerging markets has struggled 22-23 so far, but it was done again for diversification. And then other funds we own, shall we say, is an AIM fund, a UK equity fund, and our smallest fund is a Russia fund, £230. We did put £500 in, got to £600. The Russia-Ukraine conflict came and it's struggled ever since, but it makes up 0.3% of our portfolio. So, shall we say, a collection of shares or funds. 12 funds, some in profit, some in loss, but they were all bought for a reason, shall we say. And apart from, shall we say, the US Smaller Company Fund, we've got no plans to sell any existing holdings within the next, shall we say, 12 months. They're all what we call buy and hold holdings. Now remember, these are my own personal opinions, okay? It's not a get-rich-quick scheme. We will have good months, we will have bad months. But as we've said, we're making regular contributions, we're receiving regular dividends, and they are reinvesting in the funds, and hopefully we will meet our objectives of 10% for the year and a year-end value of 94,000. Now remember, if you like the videos, smash the like button, subscribe to this channel, and we'll see you again in the next video.